Good morning, students. Let's move on to the next problem. That is, the following particulars are provided by Best Company Limited. Okay, they are as per year ending, that is 31st is only 2018. So here we need to be solve the problems under both the provision. First I will explain and we will solve the problem under normal provision, then we will go for math provision. Okay, in normal provision, first we have three steps. One is calculation of taxable business income. Second one, calculation of total taxable income of the company. The next one, last one, tax liability. Okay, first we will calculate the taxable income from the business. That is divided into two parts. First one, we will calculate book profit, then go for what? Calculation of business income by adjusting unobserved business loss and unobserved depreciation. Then next, first we will calculate what? Book profit. Then for how to calculate book profit, we should be adjust admissible, inadmissible, allowable, disallowable, what income and expenses to the profit. Okay, first we will see. Yes, first we will go according to the format. Okay, we will go according to the format. The first thing we should be take net profit. We will take net profit, that is 10,23,000. 10,23,000. First we should be take, for this we should be add inadmissible expenses already debited, then allowable incomes not yet credited. Okay, first we will see inadmissible expenses already debited. We can find in profit and loss account on debit side. Okay, then please observe. First one given purchases, just ignore. Entertainment expenses given is ignore. Traveling expenses, ignore. Then depreciation. Here depreciation is given. Please observe, if the depreciation is given in profit and loss account along with the what? In adjustment. In the situation, as per profit and loss account, consider as inadmissible, add back to the profit. Then as per adjustment, consider as per IT, then there should be deduct. So here please observe, if they given depreciation as per IT in the adjustment, please observe depreciation as per IT, no, but they given some value of assets. Okay, on the base of this we need to be calculate the depreciation as per IT. Okay, so we will calculate later. Then depreciation as per profit and loss account should be add back. Then income tax, it also should be add back to the profit. Income tax paid, provision, outstanding, penalty should be add back under number provision. Then outstanding sales tax 15,000. So outstanding sales tax 15,000, it is inadmissible. Outstanding nothing but still not yet paid, inadmissible. So that should be add back. Which one? Outstanding sales tax 15,000. The next one, we have an adjustment regarding about this. I will explain later. Then provision for uncertain liability. See, a provision for uncertain liability is a provision is created against of uncertain liability is inadmissible. Add back to the profit. Then proposed dividend. Say if the dividend is paid, proposed interim dividend is there, that should be add back to the profit. Then tax consultation fees is allowable, just ignore. Then provision for loss of subsidiary company is inadmissible, so add back. Then salaries is allowable, ignore. Then sundry expenses, be careful. If any adjustment is there, treat according to that adjustment, then decide whether it's admissible or inadmissible. If there is no adjustment, the full amount is admissible or allowable. Please check it out any adjustment. Yes, we have one adjustment here. That is what? Number 3. Sundry expenses includes an item of rupees 26,000 paid in cash. Here the very important thing that if the any amount is paid excess of 10,000 in the form of cash, the entire amount is inadmissible. The entire amount is inadmissible. When the company paid cash, okay, when the company paid cash excess of 10,000, the whole amount is inadmissible. So that this 26,000 add back to the profit. Okay, then because it's paid in the form of what? Cash. Then This is the what inadmissible expenses already debited to the profit and loss account. The next one we have allowable incomes not yet credited, nothing but given in adjustment. Please observe any income is there, any income related to the business, related to the business. Say there is no income, so that next move on to the another one less inadmissible incomes already credited, then allowable expenses not yet debited, nothing but given in adjustment. Okay, first we'll go for what inadmissible incomes already credited. So please observe first one says is there, ignore amount withdraw from general reserve. Amount withdraw from general reserve is an inadmissible income, so it is already credited, so that we should be deduct normal provision should be deduct. Then long term capital gain, okay, it is inadmissible income, deduct. Then transfer fees is there, okay, it is a income, so it should be ignored. Then profit on sale of motor car, say profit on sale of motor car, it is inadmissible income under short term capital gain other than STT, so that it should be deductible. Then interest on tax free government securities, it is also inadmissible income, that is income from other source, so that you should be deduct. Okay, this is the things we should be deduct because it's already credited. Okay, then next go for what allowable expenses not yet debited, where we can find in adjustment. Please observe here the first one, the value of plant and machinery for 1/1/2018 was 30 lakhs and building rupees 5 lakh. See here why they given this adjustment, because of calculation of depreciation. Okay, so we should be calculate depreciation. Then how much depreciation we will get, the depreciation should be treated as a what allowable depreciation as per IT, so it should be deduct. Okay, next one excise duty in the form of GST for 17-18 paid during the year, that is 32,500, was not charged in profit and loss account. So it's very important one, excise duty for the previous year of 17-18, that is paid during the year. Okay, they paid, so that it is then along that is not charged, nothing but is not yet debited, so it is a allowable expenses, it is not yet debited, should be deduct. Okay, the next one, third one already explained this one. Okay, it's an inadmissible expense, is inadmissible one, should be add back. Okay, then fourth one, outstanding, out of outstanding amount of sales tax 12,500 was paid before due date filing the returns. Is very important thing, because if you are paid any outstanding expenses before filing a return, it is allowable expenses. So once again, if any outstanding amount is there, that outstanding amount paid before the filing a return, it is allowable expenses. So please observe here, we have what sales outstanding sales tax is 15,000. Okay, and it should be addable. How much? 15,000. In that 15,000, how much they paid before filing a return? 12,500. So it is what deductible. Nothing but it should be deduct. It's allowable expenses, should be deduct. Okay, so here this one. Which one? Outstanding sales tax should be add 15,000. Then another one, outstanding sales tax amount 12,500 paid before the due date filing the return, should be deduct. Okay, either you can do while adding only we can do the calculation 15,000 minus of 12,500, the remaining amount we can possible to add, but for avoiding the confusions, so first we should be add 15,000, then deduct 12,500. Okay, the next, then by doing this you will get what? Book profit. Then from the book profit you will should be deduct two things. What is that? Unabsorbed business loss and unabsorbed depreciation as per income tax. As per income tax, please observe the fifth one point, that is what? Unabsorbed business loss brought forward 3 lakh income tax purpose. So it is as per IT, deduct 3 lakh as a what? Unabsorbed business loss. Then as per what? Account purpose 2,25,000, just ignore, it will not comes under normal provision, it will comes under MAT provision. Okay, the next unabsorbed depreciation is 1,50,000 accounting purpose. See, accounting purpose nothing but what? Is a as per books, so it will not comes under normal provision. So that in normal provision there is no unabsorbed depreciation. We have only one unabsorbed loss brought forward 3 lakh as per income tax. We should be deducted from the book profit. Okay, we get taxable business head income. Okay, then after that go for calculation of GTI NTI for knowing the total taxable income from all heads of income of the company. Okay, then of what? And at the time of calculation of total tax liability of the company, be careful, we have some adjustment here, that is what? Company claim reduction in section 80IB the previous year 17-18 on 5 lakh of profits. See, the very important, when we have deduction here. Okay, we have deduction, the seventh one we have deduction here. See, please observe here, in the year of previous year 17-18, okay, they claimed reduction section 80IB on 5 lakh profit. But in the year of 17-18 the deduction section 80IB. Okay, so in this year also nothing but 2018-19 year also we should, the company can possible to claim deduction under section 80IB. 80IB not on a 5 lakh, not on a 5 lakh, how much profit the company will earn under the business income, on that they can claim 80 deduction under section 80IB. Then how much percentage? If the absence of percentage, go for 25%. Okay, so many of students will do some mistakes here. Say they will directly calculate on what? 5 lakh in this year also. No, don't do like that, because the 5 lakh is a what? Profit of 17-18, so that taken on that 5 lakh. But in this year that is 2018-19, how much business income you will get, on that calculate 25% under section 80IB. Okay, the next one, rent from house property is 1 lakh, the municipal tax paid by the owner are 10,000. Here this is comes under calculation of GTI and NTI. Okay, they given here house property, it is not an income, it is a what? Just what? Rent they given. So from this we should be calculate what? How much income, it's a gross one, we should be calculate how much is income from the house property. Okay, I will show in solution, okay, how to calculate. Then we move on to the what? Solution here. Under the normal provision, this is the 3 steps should be followed. Then first one, calculation of taxable business income. So the first one we should be take account the format net profit, the 10,23,000. For that add what? Inadmissible expenses debited and allowable incomes not yet credited. The first one, depreciation 2,75,000 as per profit loss account. Then income tax 1,90,000. Outstanding sales tax I taken 15,000. Okay, which of the outstanding sales tax paid before filing return I taken in deduct. Okay, I deducted. Then so how much is as per profit loss account I added here. Then provision for uncertain liabilities 30,000. Then proposed dividend is 90,000. Provision for loss of subsidiary company is 22,500. Then sundry expenses paid in the form of cash, because if they paid in the form of cash excess of 10,000 is inadmissible, the entire amount is should be added back. The next one, deduct inadmissible income credited and allowable expenses not yet debited. Then first one, amount withdraw from the general reserve is there in the credit side of profit and loss account. 1,50,000 should be deduct. Then long term capital gain we have 60,000 should be deduct. Profit and sale of motor car 12,500 should be deduct. This is a short term capital gain. Then interest on tax free government securities is income from other source should be deduct. Then depreciation as per IT. Here they given indirectly there, they given the value of asset, okay, we should be calculated. Then take value of machine is 30 lakhs, okay, then there is no specified the what rate of depreciation, so we would go for standard rate as per IT is 15%, calculate that 4,50,000. Then building, the value of asset is 5 lakhs, and that percentage is how much? 5, that is 25,000. This is a what depreciation as per IT. Then one more we have, that is a excess duty paid okay during the year, that is not that charged to profit and loss account, that is allowable, that is 32,500 because it's not a debited, so that I taken as a deduct. Then next one, out of outstanding amount of sales tax, how much is outstanding, that is we added here 15,000. Out of this they paid before the due date of filing the returns, so that 12,500. Be careful, any outstanding expenses paid before the what before the filing a return, that is allowable expenses, so that should be deduct. So that I deducted here 12,500. You will get 9,19,000. From this, adjust these two things. Unabsorbed business loss as per IT we have, that is 3 lakhs. Then less unabsorbed depreciation as per IT is not given, should just ignore. Then you will get 6,19,000. It is a what taxable business income. Here on this income 6,19,000, claim deduction of section 80IB. Claim deduction under section 80AB at the rate of 25%. Okay, on this amount calculate deduction under section 80IB. Okay, then next second step, calculation of total taxable income with the consideration of gross and net income of the company. First one, okay, we should take income from HP. In the problem, they are not given income from HP, they given rent from house property. Please observe here, rent from house property is 1 lakh. Okay, so that we should be calculate income of the house property. See, rent from house property is 1 lakh, then less municipal tax paid by the owner is 10,000. Remaining balance is 90,000. Is called as a gross annual value, and that deduct what standard deduction at 30% on GAV is 27,000. 90,000 to 30% is 27,000. The one more, interest on loan for house, if there should be deduct. Then you will get what income from house property, that is 63,000. The next one, income from business, already we calculated 6,19,000. Okay, next one, income from short-term capital gain other than STT we have, that is profit on sale of motor car, that is 12,500. The next one, income from other source other than the what casual income, we have interest on tax-free securities, but it is exempted. The name itself says that tax free, so that is exempted. Then we get other GTA, that is 6,94,500. okay, on this amount claim deduction. So here we have only one deduction here, that is under section 80IB. So here 80IB, please observe the problem. They give one like this, or they give one in last year the company claimed deduction 2017-18, okay, on that year profit is 5 lakhs, so that in this year 18-19 we should be claim that our company can claim deduction in section 80IB on the what current year profit, because I think you know under section 80IB, 80IA, 80IC, okay, 80IAB, if you claim the deduction, okay, that should be for consecutive for 10 years out of 15 assessment year. Okay, so that in previous year they claimed, so that in this year also should be provide deduction under section 80 IB on the current year profit, not for previous year profit. Okay, remember this one. So how much is current year profit? That is 6,19,000. 6,19,000 on this provide deduction under section 80 IB. How much percentage? Here the percentage is not specified. The go for what? 25%. Okay, we'll get 1,54,750. Okay, when the company claiming the deduction of section 80 IAB, 80 IA, 80 IAC, on this situation, they should be calculated on that year profit. Okay, next you will get other taxable income 5,39,750. For this, add some other incomes. The income from short-term capital gain with liable for STT. There is no income. Long-term capital gain liable for STT. There is no income. Other long-term capital gain we have in the profit loss account credit side, that is 60,000. Then casual income, there is no casual income. When you add this, you will get what? 5,99,750. Then now calculate tax liability. When you calculate the tax liability, please remember this one: the total turnover of the company is not excess to 50 crores, then the tax rate is applicable 25%. More than that, 30%. Then the company have less than 250 crores turnover, so that is applicable 25% as a flat rate. Then calculate tax liability. First one, other taxable income, that is 5,39,750 on 25%. You will get 1,34,937.5. Then next go forward, short-term capital gain liable for STT 15%. There is no income. Long-term capital gain liable for STT with exemption of 1 lakh 10%. There is no income. Other long-term capital gain, that is we have, that is 60,000 on the 20%. We will get 12,000. Then casual income, there is no income here. Then total taxable amount without cess, that is 1,46,937.5. Then add education cess on that, we will get 5,877.5. Then total tax liability and normal provision 1,52,815. Okay, this is the one way of calculation of tax rate under normal provision. Okay, then next I move on to the MAT provision. First I will explain, okay, how to solve or whichever the items you should be considered under MAT provision. Then you will go for the solution. Okay, this is the problem. In MAT provision you should be follow two steps. One is calculation of book profit under MAT provision 115 JB. Second, calculation of tax liability. Okay, for calculation of book profit, first you should be take what profit as per profit loss account. Further should be add statutory additions. Then we should be get statutory deletions. Okay, first we will take profit as per profit loss account 10,23,000. For 10,23,000, add some statutory additions. So when solving the MAT provision, please remember the format. We have total 11 additions, then 10 deletions. Okay, then first observe additions one by one. Please observe profit loss account on debit side. Here whichever the entries are recorded in debit side and credit side, that should be considered. Okay, except two, that is depreciation and revaluation. Another one is balance forward, business loss, and unobserved depreciation. Apart from that, please observe profit loss account. How much information is there, that much should be considered. Apart from that, don't worry. The next, take first net profit 10,23,000. Then add statutory additions. Please observe purchase, ignore, intermittent expenses, ignore, traveling, ignore, and depreciation. Depreciation you should be take compulsory. Okay, as per profit loss account, depreciation should be add back. When adding, it should be include depreciation or revaluation. So there is a specification, you should be assumed that it is already added, so that add back depreciation as per profit loss account. Then next one, income tax. Here income tax provision, penalty outstanding, that should be added back to the profit in MAT provision. Then outstanding sales tax, just ignore, it not comes under MAT provision. Then provision for uncertain liability. say a provision for uncertain liability, it should be taken to account. Okay, provision for uncertain liability, we should be taken into account. It should be added back to the profit under MAT provision. Then next one, proposed dividend. Proposed dividends should be added back to the profit in MAT provision. Then tax consultation fees, ignore. Then provision for loss of subsidiary company, it should be added back to the profit in MAT provision. Then salaries, ignore. Sundry expenses, ignore. Okay, this is the item should be add. That's it. Okay, next one, statutory deletions. Okay, which are the statutory deletions is there? Nothing but is already credited. Please suppose the credit side. Okay, then first one says is there, ignore. Second one, amount withdraw from the general reserves. Okay, it should be deduct. If amount is created, then should debit side add back. If amount is withdraw from the reserves, should deduct. Okay, now we should be deduct. Then long-term capital gain, just ignore. Transfer fees, ignore. Profit on sale of motor car, ignore. Interest on tax-free government securities. Interest on tax-free government securities, just ignore. Okay, ignore. This is the what credits items. Along with this, observed adjustment. Okay, in adjustment we should be take two things. One is depreciation revaluation if there. Along with that, one more we should make, there is unabsorbed business loss and unabsorbed depreciation as per book. Okay, please observe the fifth point we have. Unabsorbed business loss brought forward 3 lakhs is income tax purpose already be taken, just ignore. Then another one is 2,25,000 as per accounting purpose. It should be take under MAT. Okay, this amount should be compared with the what? Unabsorbed depreciation 1,50,000. Yes, accounting purpose. Okay, should be taken into account. So you should be taking the comparison value, that is unabsorbed business loss 2,25,000 as per accounting purpose, nothing but what? Book. As per accounting, nothing but book only. Then that compared with the unabsorbed depreciation 1,50,000 for accounting purpose, whichever is the least, that amount should be deduct. Okay, apart from that, don't consider. Then this is a solution. Computation of book profit under MAT provision. Then I will go for account to the format. Okay, then first take net profit as per profit and loss account is 10,23,000. Then for that add statutory additions. The first one, income tax paid, payable, provision of income tax debited to the profit and loss account. Yes, we have income tax in problem, that is 1,90,000, add back. Then transfer to the reserves, debited profit and loss account. There is no reserves on the debit side, just ignore. Then provision for meeting the liability. Yes, we have that amount in debit side of profit and loss account. What is the provision for uncertain liabilities? 30,000. Add back. Provision for loss of subsidiary company is there in the problem. The 22,500 we taken. The next dividends paid, proposed dividend. Okay, our interim dividend debited to profit and loss account should be taken into account. Yes, we have the proposed dividend is 90,000 taken. Okay, next. Expenditure related to what? Exempted income, section 10, 11, 12, except section 10, section 38, there is no income, just ignore. Then depreciation should be taken, take compulsory. Okay, as per founders account, how much is debited, but there should be including evaluation depreciation. If there is no information exactly whether it is include or exclude, okay, the absence of that, we should assume that is included. So that as per founders account, I taken 2,75,000. Then deferred tax, there is no deferred tax in this problem. Then provision for diminishing the value of asset, there is no provisions in the debit side. Then balance in the revaluation reserves related to the revalued asset for disposal of such asset, there is no such information. Then loss on transfer of shares, special purpose vehicle, there is no such kind of loss provision in case of in profit and loss account debit side. So total amount will get 16,30,500. The next one, statutory deletions or deductions. The first one, amount withdraw from the reserves. Yes, we have amount withdraw from the reserves in credit side 1,50,000. There should be deduct. Then exempted income under section 10, 11, 12. There is no such kind of income. Okay, so just ignore. Then amount withdrawn from the reversion reserve. There is no information recorded in profit and loss account credit side. Ignore. Profit and sick industrial unit. There is no such kind of a record in profit and loss account credit side. Then deferred tax is credit side. There is no record in the problem. Then depreciation. Say we should deduct compulsory depreciation. Okay, while deducting, we should be deduct the what, the depreciation, the excluding of revaluation, So first we should take depreciation as per profit and loss account 2,75,000 minus the depreciation revaluation. There is no information, so the same amount I am deducting here. Okay, the next one, amount brought forward losses, business loss and unabsorbed depreciation as per book we required. Then among this, whichever is least. Okay, both the amount we have, there is unabsorbed business loss is 2,25,000, then unabsorbed depreciation is 1,50,000, whichever is the least, 1,50,000. Then next one, gain on transfer of shares in special purpose vehicle. There is no entry. Okay, so that just ignore. Then total we get 10,55,500. Okay, then on this calculate tax liability 18%, that is 1,95,267.5. On that calculate 4%, that is 7,810.5. Then you add, that is 2,03,780.2. This is the what tax liability as per MAT provision. The next one, calculation of final tax liability with the comparison of what tax liability under normal provision and tax liability as per MAT provision, whichever is high. Then please observe, as per normal provision 1,52,815, then as per MAT provision 2,03,078.2, whichever is high as per MAT provision. Yes, in this case the company can claim the tax credit. Okay, see how. Here, the company can avail the tax credit because the final tax liability is as per MAT provision. So, how to calculate tax credit here? That is MAT provision tax minus of normal tax provision. The remaining balance is called the what? Tax credit. Then 2,03,078.2 minus of 1,52,815. The remaining balance 50,263.2. This is the what tax credit to the company. Okay, this is the solution for this problem. Okay, thank you.